Good afternoon. This is the Elliott Wave weekly update for gold, silver, and platinum, being recorded on Sunday, April the 6th at 12:50 p.m. Pacific Daylight Time. I'm going to start here on gold. I'm on the weekly chart. Uh, we saw gold taking a little bit of a tumble off of all-time highs, just above 3,200. Now, some people are tagging that along with the turmoil in the markets, along with just raising capital. So getting out of long positions, which is not an unsmart thing to do, to be honest with you. But depending on your time frame for trading, if you were getting long up there, you likely decided that you don't want to hold it through any correction. Now, on an Elliott wave basis, the correction was called for. I was looking for it, and now we've got it started. So I have filled in the blanks. I'm on the weekly chart, which is going to be easiest because I can get back and show you what's in play. So largest that I got so far that I'm working on is that we are continuing higher in a minor third wave. And so that minor third wave then goes up to finish an intermediate degree. And so we still have that, but we've got a lot in between. So before talking about an intermediate third wave completing. So here we are inside a minor third wave. It's going to consist of 5 waves of minute degree, of which, by all purpose, by all visuals, appears to have completed the minute third wave at the highs last week. And so what that now suggests is that we're going to start pulling back. And because we're looking for a minute fourth wave, we're going to look towards the minuet fourth wave for our support. Now, that's quite the drop, to be honest with you. Getting up to 3,200, dropping back to these lows at 2,550 is quite a big drop. Can it happen? Of course it can happen. A lot of things can happen. And accordingly, it would not be out of the unusual with terms of Elliott. Now, where can we start to find support? Well, I think we can start here. 28.35, 28.36, up in that area. Not that far below 3,200, but enough to kind of put a little chill into those that are getting long up here, anticipating that gold is just going to continue to rally, which in all honesty, this is what I think it is going to do. But not withstanding any internal pullbacks. Now, they're going to seem larger, and they are larger because of the steepness, the upward trajectory of this wave, And so we're in third waves, moving on our way up. Those tend to be pretty large. Now, granted that in gold, often it's this fifth wave that will put the surprise in everyone because it's the one that will really extend and power higher or lower. But here we are. Okay, so minor wave 3, minute 1, 2, 3. That internal 1, 2, 3, 4, 5 on minuet degree. Very clean, by the way, very clean. And we got up there. The 5 waves up, very clean, with that fifth wave being the one that just kept pushing. And you know what? I got to tell you, it may not be over. There continues to be resistance. I took it off just based on some internal, but let me just try to put one back on and put it over here. So you see, we have 33, and that would be 2.618, where wave 5 would be 2.618 times the length of wave 1. So we have that one. So I'm going to take that off. And then we also can just take a look to see for this minuet fifth wave, what we may have anything left. We have one there, it's 34.02. So even coming down, we can see that the fibs have pretty much been satisfied up to 1.618 on all these. So 2.618, can it happen? Sure. But sir, there has to be a catalyst and to turn things as strongly as we would expect them to do right now. Now, granted, on Friday afternoon, gold did catch a little bit of a bid and ended up, back above or just above 3,056. So, and that was after the low was reached at 32. So it kind of came up in that additional hour. And fair enough, but I still think we're going to have a little bit more downside. So let me take these off. If indeed this is just still a part of internally, that this is again a sub minuet wave one, right? So starting from here, this is a wave one. This is a wave two. Then we'd expect a powerhouse back up and to break back above 3,200 and to keep going. Now, as I just showed you, we go like that. And then I go over to here. And to keep going will take us all the way through 32, the 3,200 handle, and up to 33, where we're then starting to run into a minor degree at 3307. And then I'm sure here, well, we're pretty far up. We could put the next one on there. And let's edit those properties. And let's call this, we're going to take it up. And let's see what that looks like. Yeah, there it is, 35. So you can see that as we start to really get above these levels, then it really spreads out. So we have to go to the next degree. And so, and I'm not really kind of looking to do that because I just want to stick to what we have right in front of us. So let me take this guy off. And let me take this guy because we have 3320. If it kind of blasts up, I think it can get right through everything and just push right through 3,200. Because remember, I've never been here before. So if you're not long already, there's no place for people to say, well, we went to that level before, it stopped, it did this, it did that. So resistance kind of just comes by fibs. And there could be other fib combinations that people are going to be using to push and see where the market can go. So again, I'm going to be looking for an ABC down. Now I'm going to quickly bring this down. Let's bring it down to the hourly chart. And we can see A, B, it could be done. It could be done. Now, take it all the way back out to that weekly. That's it. We still need it to come down inside this 4, at least this 4. If we're looking for in just this internal, that's my first line, 2840. My second line, 2535, somewhere in there. In between, I've got a weekly 8 at 2980, a 20 at 2858, a 50 at 2621. I think 2600 continues to be pretty strong support. Now, I am continuing to look for additional highs. So I look at all of this as corrective. Now, again, putting through that it's been quite a mighty rally. So pullbacks. I've always, in all my years of trading gold, always observed that gold traders are some of the best that I've seen. I mean, it's like you hear me talk about JP Morgan's traders that deal with the collars, that they move out quarterly, that they're stealth, that they're extremely excellent traders in putting the trades together, putting the trades on, and then managing the trades. These are top-notch traders. And so when I go and I look at gold and I think about, you have market makers in gold as well. And when there was a trading pit on the floor, those traders, the more longer term traders have been through quite a bit with gold. And so they realize, and most people can, you just have to go out and get the Commitment of Traders report, which is put out weekly by the COMEX, which is the exchange where this market trades. And when you look at that, you can see who's long, who's short. And traders in there, when they start to see that producers or the public or retail is too long or very long, then they're going to push it a little bit. They're going to push down a little bit and kind of push out the weak hands. That kind of lets them know who's actually doing the buying. A producer who's doing the buying ain't going to come in and panic back out. They're taking it and they're going to do it. So that can be going on. We saw one day where gold was down like $80. So I'm not surprised by it. A lot of people go like, oh my God, gold's down a lot. And to tell you the truth, it is, because if you're trading the future, it's $10 a tick. So 10-cent move in gold is $10. So when it goes from 340 to 350, or 3056.10 to 3056.20, it's $10. If it goes the full point, it's $100. So when it drops 80 points, that's a lot of money. That's a lot of money for a position. So again, that also can be in play here. So let's just see again. If I'm looking here, I'll put this one back on. And I'm just going to put come on, my straight fibs. And I don't know what, I took them by accident. I accidentally cut them. I took them off. So let me put them back on. These are for this pullback. And again, 2363825. I'm not looking for 618. And you're going to see that's like, wow, that's quite the drop. So 0.236, 2876, 2675, 382. So can it get there? Sure. Why would we think it can't? What's going to push it? Myriad of things. The fibs don't lie. And by the way, even on the straight Elliott, that would say that the minute fourth wave should find its support and more likely towards the bottom end of the previous fourth wave of one lesser degree. Here's minute, one lesser degree minuet. There it is. That's where we come up with 2540, even though the 50% is 2512. So are they possible? Yes, if we're following normal Elliott, and it's going to come down in an ABC. And that's not that much damage to the whole thing. Takes out that last rally, sure. But we're correcting this move from 1821 up to that high. So those numbers fit for the size of the correction that we're looking for. And once done, then we're looking for it to resume to the upside. So my longer term targets remain in play. You see, we've cleaned a lot of them out. I'll wait for the 4, and then I'll run wave 1 to wave 4 to get wave 5 on the minute degree. But just on some of the minor, we have 3307. I think that might get broken, by the way. And then we start running into the primary degree and the cycle degree. So we're up here in areas that could start to finish this whole minor third wave and then on up. Let me just kind of go out to a 5-year still with that minor. And I don't use it because you can see different contract differences, but we have 3,500, 3,600, 3,800, and then we're up above 4,000. So yeah, folks, I do continue to see the very strong possibilities that before all of this is done, now I have to go all the way out to my monthly. Well, let's look at the 10-year. 10-year is just showing me that intermediate third wave and the minor third that's building. Look at the size of the minor wave 1. Minor wave 3 should be at least equal. And that's what we're looking at here. We've already surpassed it. We're now looking at where wave three would be 1.618 times the length of wave one. And that's up at that 3,300 level. So yeah, they all fit in terms of the size of the previous, what we're comparing it to, and the fibs are lining up. And we're meeting them. That's the other thing that I want to bring up. That when the fibs are true and they play to those fib levels, we're not the only ones devising them. We're not the only ones looking at it. And they're getting programmed in. And so there's no reason to change. All right. So long term, even midterm, I still look for additional upside in gold. We're getting through a correction. We have our levels 28.75, 26.75, 25.12. And I'm not really, I just include it because it does correspond with the previous fourth, which is actually 25.50. I'm at low, but it could be in the price territory. So we get the thing from 27.90 down to 25.50 within that fourth wave of one lesser degree. So again, from where we are, people go, oh, that's so much. It's like it really isn't. So I'm sticking with it. And anybody, I open up the window, I open up the door. Please share your analysis. You could share your thoughts, and you could give us what your comments might be about towards gold. If they're productive and they're adding to the conversation, I welcome them. If they're not, well, then you're likely going to be deleted. All right, let's go over and take a look at silver. Silver, by the way, wow, did it get attacked and kicked to the curb, so to speak, last week. And what it did, it brought about where, wow, I thought we were already done with this minor four and we're in a minor five and should have kept going. But remember, I kept talking about the silver's having a problem. Silver's having a problem to keep up with gold and how gold was rallying. Now we got to know why. We remain within that minor fourth wave. And guess what? We've come all the way back down towards the bottom. So maybe I'm hoping that this is going to put in a C wave and then I can stick that four down here and we pick up and rally again. If not, we do have 618. Now, I'm not always looking for a fourth wave to be 618, particularly when it's got to really be a lot of congestion here. But there's wave one, minor wave one. So it can't go below 26, 26.50, to be honest with you. Because then it's overlapping wave one and then it's totally something else. And in that case, it's left as three up. And I would be wondering what the A it was. Because I got an A wave, I got a B wave. The only other thing I could say, it's A, B, A of B, B of B, and we're now in a C wave down. That's the alternate. And it does not bode well for silver if that's actually what's in control here. So again, there would have to be something behind that heavy of selling in the particular atmosphere that precious metals are in. If they suddenly just fall out of favor and they're no longer that safety investment where, to protect money, to protect dollars, you'll see people put money in gold. You'll see people use silver as well. And outside of the United States, there are countries that are using platinum. So again, this is kind of an interesting drop. And when we get over to platinum, you're going to see the same thing. So the end of the week, okay, this is a weekly chart. Bad week for silver. We dropped from 35 back to 28. That's 7 cents. That's a pretty large move for silver. Now, I could tell you the truth, I can't begin to say that wasn't, margin calls, on traders who were long silver being forced out because it was just down too low and their margin, they couldn't pay. Or there was an increase in the margin. forcing margin calls, forcing selling out of just long positions, which were going to be costly. So a lot of things can be going on now. Right now, pretty easy ABC flat. You know, we're down, but we can go maybe a little bit more. I'm really not looking for anything too much. I wouldn't be looking for below 28 at this stage. If it does, then I got to look at something else as at play. So, and we would then, yeah, these have to be adjusted, but I'll wait. Because still, only other choice that I have is there's A, and then we have an A, we have a B, and then a C still within this intermediate wave B. That would really produce a much stronger decline in silver, and it would have to be attached to something. I think there'd have to be a reason to just run from silver right now and not gold. So we'll wait and see for the verdict on this. But I tell you, it kind of does look like um, covering, being long and getting stuck in a margin call as the market started to crumble, and then just forcing the additional as uh, accounts were closed, positions were closed out by clearing firms. So I'm going to look for this to kind of finish up, put a C there, and then resume a fifth wave heading higher. Taking it down and taking a look, let's take a look at the daily chart. Boy, that's ugly. That's very ugly. And it's almost like the equity market, right? You can't really see. It's just really kind of hard. It's a big, big drop, no doubt. And it was straight down, no doubt. But so was the equity market. So I'm finding a little bit interesting that both gold and silver kind of fell in the same vein as the equity markets, which could just mean the positions were being liquidated to raise capital, to get the money back. So we saw a lot of that in the stock market. Or for all I know, folks, silver options trade, so it could have something to do with SLV. Now, I don't follow those options as closely as I do within our equity markets, but it could have been something there. It could have been totally attached to Friday's expiration, totally attached to this gamma explosion. As the market dropped, that shorts were getting killed, and it could have been inputs. So again, not knowing what's inside of all of this, I get to get around and see for news. But right now, I'm just going to look at it on an Elliott basis, and I think we could come down 28.90. I'm hoping provide some stronger support. A strong breaks there, shoves it down to here, shoves it down to 27.63 to 27.38, 27.40, 27.27. Actually, there you have it. So again, still looking for that a minor wave 4. And I had to readjust the count because of this. So again, I did not do my homework in terms of going out and really doing a search for what happened in silver. But at this point, because I know from trading options and I know from the options in SPX and the NQs and all the rest of our ETFs, and that silver has an ETF, that it could have been something in SLV. All right, lastly, let's go over and take a look at platinum. Here we have it as well. Now, platinum, I was looking for this drop. Again, platinum options, I don't know. But I was looking for the market to drop. But guess what? It did it all at one swing. And I'd have to kind of take a look at this on this hourly chart to see. 1, 2, 3, 4, 1, 2. Oh, yeah, 3, 4, 5. It could be. But what that would suggest, if F9, what was that low? 910.70. Oh boy, talk about hitting it on the nose, hitting it on the nose. The support was at 910.50. It hit 70. Wow. But didn't bounce all that hard. Kind of did. Then it came back down. So again, um, let me take it back out to my daily. I've been looking for this move. Why? Because I'm looking for that minor E wave within the intermediate B wave. I'm going to go out once here. There we have it. Here is that minor degree triangle pattern to put in an intermediate B wave. What comes after all this? A C wave rally. And guess what? We're the E wave formed a triangle within the larger B wave triangle. Not incredibly popular or frequent, but it is not impossible, and it does happen. I think more often than we think. So that is kind of what I think is happening inside the E wave. I thought it was done there. Then I thought it was done there. And then I realized, oh, it's an A, B, C, D, E. And E's come down in an A, B, C. And it hit that 100%. Now I'm going to give it down to 875.70 because often in a triangle, the E wave will break the boundary, hit the next support level down, and then roof, turn around and rip in the opposite direction because it's done. And what we learn or what we know about triangle patterns is that when they're complete, the market normally will turn and thrust up and out of a triangle. Now, this case, it's turning and thrusting higher. We also can have them where they turn and thrust lower and out of the triangle. This one is thrusting higher and eventually getting out of the triangle. So as strong as this was, to be honest with you, when it's finished, I'm going to be looking for the same strength to take us up and out of it. So again, silver, platinum, if you're reaching your close to the low, then we're looking for a strong turn and a push back up. So it's going to get interesting, at least in two of the precious metals. Actually, gold's going to keep us on our toes as well. So the precious metals are very active right now. And I think it's a market, if you're trading it, you're going to have to pay attention. It isn't where you just kind of put on, I'll go buy some calls or I'll buy some puts and let them just sit and focus on something else. I think if you're going to go trade platinum, if you're going to go trade silver or gold, you need to kind of pay attention to what's happening to them, do a little bit of research. It's like what's making them tick in one way or the other right now. All of them have options. So you want to take a look at how these options are trading. I'm talking enough about gamma flow. It's going to exist in these products as well, not just in the stock market. Also, it exists within the treasury markets, which I'm going to be doing an update on next. So trying to get all of it updated right now because we're in a very difficult period under very difficult administration. So let's see. Let's see what we get. So there's platinum, there's silver, there's gold. I'm going to be keeping a close eye on them, of course. And as I promised, if warranted, I will be making more frequent. Okay. So that has been my promise. I'm going to try to adhere to it. So here's at least the weekly. Let's see what happens next week.